All right, excellent. Well, thank you everyone for your patience. I do apologize again for the slight delay today, and we will now start our webinar. So good afternoon and welcome to this CAFE webinar on provincial insurance policy and regulatory priorities and emerging issues as Canada progresses out of COVID-19. We are delighted to be joined today by three leading Canadian insurance policymakers and influencers who also have regulatory responsibilities. Chris Carter, Vice President, Financial Institutions and Mortgage Brokers Market Conduct at the BC Financial Services Authority. Mark Bryson, Assistant Deputy Minister and Superintendent of Insurance at Alberta Treasury Board and Finance. And Jeanette Seibel, Deputy Superintendent of Insurance at the Financial and Consumer Affairs Authority of Saskatchewan. I'm going to start by just giving a brief introduction of the three panelists. Chris Carter oversees the market conduct of BC's mortgage brokers, insurance companies, credit unions, and trust companies at the BC Financial Services Authority. Chris joined BCFSA's predecessor organization, the BC Financial Institutions Commission, in 2012. During his time with BC FICOM and BC FSA, Chris has advanced the fair treatment of British Columbians by raising marketplace conduct standards and holding industry to those standards. Chris is also BC FSA's current sitting member of the Canadian Council of Insurance Regulators, or the CCIR. Chris is committed to strengthening British Columbia's and Canada's financial services regulatory framework through coordination and collaboration with peer regulators and other partners. He heads a team of professionals who are committed to protecting British Columbians by identifying, investigating, and dealing with marketplace risks. Prior to joining BC FICOM, Chris led high-profile trade and investment development initiatives with BC's Ministry of Trade and Investment. Previously, with the Government of Australia, Chris advanced that country's international education interests through market development, bilateral relations, and policy initiatives. Chris holds Bachelor of Laws and Bachelor of Commerce degrees from Murdoch University in Western Australia. Mark Bryson, over a 23-year public service career, has held positions in both the Alberta and British Columbia provincial government systems. He has led business, technology, and policy transformation initiatives at the regional, provincial, and pan-Canadian levels of the public sector. Currently, as Assistant Deputy Minister of Financial Sector Regulation and Policy and Superintendent of Insurance, Mark is responsible for regulation and supervision of insurance companies, registered private sector pension plans, as well for strategic policy related to the delivery of the mandate for Alberta gaming, liquor and cannabis, and horse racing Alberta. Mark is also Alberta Treasury Board and Finance's current sitting member of the Canadian Council of Insurance Regulators, or the CCIR. Prior to assuming his current position in December 2020, Mark served as Alberta's Assistant Deputy Minister of Corporate Planning and Red Tape Reduction, where he was responsible for strategic and business planning and leading the government's efforts to cut unnecessary red tape by 1/3 to reduce costs, speed up approvals, and improve the lives of Albertans and Alberta businesses. Mark holds Bachelor of Science degrees in Economics and Health Information Science, along with professional certificates in Project Management and Public Sector Policy. Jeanette Seibel is Deputy Superintendent of Insurance at the Financial and Consumer Affairs Authority of Saskatchewan, the FCAA, and is also Director of the Insurance and Real Estate Division, or IRED there. The IRED is responsible for administration of the Insurance Act and the Real Estate Act, which includes licensing and oversight of insurers, along with oversight of the Insurance Councils of Saskatchewan and the Saskatchewan Real Estate Commission. Jan is also Saskatchewan FCAA's current sitting member of the Canadian Council of Insurance Regulators, CCIR. And prior to her role as Director of IRED and Deputy Superintendent of Insurance, Jan was a lawyer with the FCAA legal branch. She's also an avid volunteer in Saskatchewan's arts and cultural sectors. Welcome, Chris. Welcome, Mark. Welcome, Jan. We're just delighted to have you with us today. My name is Keith Martin, and I am Co-Executive Director of the Canadian Association of Financial Institutions and Insurance, or CAFI. On behalf of myself and my Co-Executive Director colleague, Brendan Wicks, and the CAFI Board of Directors, thank you for joining our webinar today. CAFI is a not-for-profit association dedicated to the development of an open and flexible insurance marketplace. Our 15 members include the insurance arms of Canada's major banks and credit unions, along with their insurer business partners, which underwrite credit protection insurance and travel insurance. This is the second of 3 CAFI webinars that we'll be holding in the fall of 2021, all of which are focused primarily on issues related to life and health insurance policy and regulation in Canada. Now, I want to emphasize, if you have any questions that you would like to pose to one or more of our 3 panelists during the Q&A session, for which we've allotted about 20 minutes at the conclusion of today's webinar, please send them to me as the host using the Q&A function of Zoom, and I will pose them on your behalf. Unless you specifically request in your question that you be identified as its source, I will pose all questions on an anonymous basis. And just before we get underway, I want to extend a special welcome to some VIP guest attendees. In addition to many representatives from our 15 CAFI member companies and from our 10 associates, which supply essential services to our association and its members, we have attendees today from allied industry associations such as the Canadian Life and Health Insurance Association and the Travel Health Insurance Association, and from insurance and financial services regulators and policymakers from across the country, including the following: the Government of Alberta, the Alberta Insurance Council, BC Financial Services Authority, the Insurance Council of BC, the Canadian Council of Insurance Regulators, the Canadian Insurance Services Regulatory Organizations, or CISRO, Consumer and Financial Services Commission of New Brunswick, the Insurance Council of Manitoba, the Insurance Councils of Saskatchewan, the Office of the Alberta Superintendent of Insurance, the Office of the Superintendent of Financial Institutions, or OSFI, and the Government of Yukon. Welcome to you all. Well, let's jump right into the webinar. And Chris, Mark, and Jan, in that order to start, I'd like to ask you, first of all, what are your jurisdiction's life and health insurance regulatory priorities right now? And what issues are on your regulatory radar and on your horizon as we persevere through what are hopefully the late stages of the COVID-19 pandemic in Canada? Chris, let me start with you.
Yeah, so thank you very much for the invitation, Keith. Can I just get a thumbs up from you in terms of my audio is coming across clearly?
Your voice is a bit light, so if you could just speak a little louder.
Okay, certainly. So firstly, thank you for the opportunity to participate in today's seminar. Really looking forward to the conversation, looking forward to the engagement. If I were to identify 3 priorities here in British Columbia, you know, I don't think there'd be any surprises to any of the participants on the call. First of all, we are looking at fair treatment of consumers code of conduct here in British Columbia. It's a new requirement of our legislation that we endorse a code that insurers are expected to respond to here in British Columbia when they conduct business. Participants on the call would be very familiar with the fair treatment of consumers guideline and principles that Ccir and Cisro have endorsed. So expect that to be embedded into our regulatory framework here in British Columbia. We're committed to transparency, we're committed to engagement on that front, and that particular priority forms part of our regulatory roadmap, which we've released and communicated to the street already. So looking forward to ongoing conversations on fair treatment of consumers here in British Columbia, which of course is material and directly related to all participants on the call. Number 2, climate change, natural catastrophe risk. You know, show me an insurer who's not a regulator, an insurer and industry participant who's not interested in this space. There's 2 complementary sides, of course. There's prudential side of the equation. There's the conduct side of the equation. You know, here in British Columbia, we had our wildfire scenario over the summer. We had a heat dome where we saw a doubling the number of hospitalizations related to that. So that is a piece of the equation that we're very focused on here in British Columbia, and also nationally, of course. And there's just lastly, again, no surprises here, cyber risk. So we recently released some information security guidance and incident report expectations here in British Columbia. And again, that the general thrust, the general approach of those should come as no surprise to any of the participants on the call in terms of mirroring what they'd already be familiar with at the federal level through OSFI. So they're the three things that spring to mind, Keith, in terms of top priorities here in British Columbia.
Thank you very much, Chris. Mark, we'd love to hear from you on this same topic.
It's interesting. Chris and I think our priorities are very similar. The fair treatment of consumers is always, from a regulator perspective, something that is our main responsibility. Making sure that that we have some regulatory structures in place and the right relationships, so that consumers are being treated fairly. But really, the big challenge there is, we get a lot of letter writing campaigns when there are adverse effects out there, and we hear about that quite a bit, but that's our role. Alberta, specifically from a climate change perspective, I know we're participating on a working group on climate change with CCIR. Very important, because the adverse effects on all insurance files for Alberta, because of the significant climate issues we've had. The impact of one area that I think will be to the future that will be interesting is the impact of COVID with respect to life insurance claims, and where that may impact the cost of life insurance potentially on consumers, is an area that I think will be a future interesting discussion to have. I am aware that during COVID-19 there was a large effort, a large investment for new online solutions by insurers, and that's very much really does benefit getting insurance information in a more timely fashion. Making sure that the balance of moving to online does support consumers for ease and access, and also the balance between making sure that we do have the right security, cybersecurity pieces in place. So, but I am aware that the Canadian Life and Health Insurance Association has just opened up some government affairs office in Calgary this year to support its members who are operating in Western Canada. My office will establish regular meetings with industry associations to discuss their member experiences and how the superintendent can support and make regulatory environment conducive for their operations. And any industry concerns are shared with our minister. So those are kind of the key priorities. Engagement is a big piece that needs to continue and is an ongoing process. Thank you.
Mark, before I turn it over to Jan to speak to this issue, could I just pick up on your comments on digitization and on sort of the enhanced online focus of industry? You mentioned cybersecurity and some other issues related to that. In your jurisdiction, are there new regulatory challenges as a result of that?
I wouldn't say regulatory challenges. Claims underwriting and administrative processes, I think, are more efficient in the online space, and I think they're more user-friendly. But not all individuals have access, have as much robust access or understand how to obtain that access. So on one hand, we're encouraging that because it is better for consumers. But I think as regulators, our communication with insurance providers is sometimes about making sure that we have all channels open, not just the online one. But if you are in the online space, that you have to make sure that it's secure, right? Safe and secure. And that is one of our key focuses and something we've communicated. And I think everyone would say, yes, that's the case. But one incident causes a great deal of pain for many.
Understood. We did at CAFE a research study with Polera on the attitudes of Canadians towards insurance and digitization. And although I think 96% of Canadians who have credit protection insurance and have accessed it online said they were satisfied with the experience. We also found that despite that, nearly 2/3 of Canadians want to have the option of going back to their branch, largely because they like the in-person contact. So I think you're right on there, Mark. I mean, it is going to be a hybrid model with more than just one channel. Jeanette, we're delayed in getting to you. Very interested in your comments. So let me turn it over to you to offer your thoughts on this question.
Thanks, Keith. We're very similar to BC and Alberta in a lot of our priorities. We look forward to working with our CCIR counterparts on a number of those issues, such as climate change. Of course, things like long COVID and the impact of COVID in general on the insurance industry is something we'll be watching closely. There's so many new issues like AI and automated decision making that are starting to emerge, and will there be an increase in complaints because of those types of systems? As you know, we've had a new insurance legislation that was introduced in 2020, which was an interesting year to introduce new legislation. So we'll be turning back to looking at some of the outstanding issues that are still need to be resolved within the Act. There were some outstanding policy issues that needed to be looked at and some guidance. A lot of really good questions have come up with regard to compliance throughout the past year. So we'll be looking at how to provide better guidance on some of those. And of course, we've got new financial planner and financial advisor title protection legislation that we've introduced. And it's a bit adjacent to the life and health insurance side of things, but there are quite a number of life agents that use these titles, and also employees of financial institutions. So we're looking at, the Act has been passed and we're in the process of developing regulations and figuring out how that's going to apply to all the different folks out there that are using those titles or similar titles.
Excellent. Thank you very much, Jan. And I might start with you for the next question and then go to the other two panelists. And that question is about trends and developments in the insurance regulatory or policy environment due to COVID-19, particularly in light of the changes that's brought about in insurance as a regulated sector. And we touched upon digitization. There are other changes as well. So, Jan, do you think that there are some trends or some changes that you as a regulator are thinking about and anticipating?
I think so. I think we're just at the very beginning to see what those trends might be. I know we'll be looking closely to see if we start to get complaints related to COVID-related claims for disability or life insurance, those types of things, or if people are having trouble with access to insurance. We were in a good position at the beginning of the pandemic in that the new Act was in force, which permitted a lot more online transactions for insurance that hadn't been permitted before. But of course, we'll be monitoring to make sure those are still functioning the way they should be, that folks aren't having trouble. We haven't had many complaints up to date related to the pandemic, but I think really as we move into the future living with COVID type of cycle, we'll be seeing perhaps more of an impact there.
Thanks very much, Jan. Chris, let me go over to you now to speak on this matter.
Yeah, certainly. Thanks, Keith. I mean, so let's think back to earlier last year, and I would say, generally my observation is that industry has been extraordinarily responsive and flexible, as we all have been, both in terms of the operational response and logistical response right out of the gates. I think what I've seen is demonstrated responsiveness to the circumstances of consumers in a challenging environment. I would echo Jan's thoughts in terms of, I think we're early days in terms of the tail on the health side. So we're monitoring that very closely. I would also just reflect on the fact that, of course, while there's been a terrible cost that the pandemic has invoked, by the same token, it has accelerated some change, which I think is potentially for the better. It's certainly It's certainly accelerated our relationship with industry. We have much more regular touch points. We're able to participate on fora of this nature. We have ongoing, more rigorous and robust engagement and conversation with industry. And let's face it, change is a constant, and we have to be engaged, and we have to be in communication to understand where the risks are and to be able to respond to the risks. So I think a terrible COVID has extracted a terrible cost. By the same token, I think that has been a bit of an accelerant in terms of improved engagement with industry, improved conversations with industry, and is continuous monitoring as a regulator of practices in the marketplace.
Great, thanks very much for that, Chris. That's very interesting. Mark, we'd love to hear your thoughts on this question.
Yeah, I don't know that I have much more to add. I think we're in the same position. It's early days here. I think if we've learned anything coming out of COVID, we're working through COVID. Who knows what the next 2-3 months or 6 months will mean. We are, like I said, monitoring the impacts of COVID potentially on different forms of insurance. In this case, life insurance, what we're discussing here. But there are many other insurance pieces that COVID has impacted significantly, and our minister is very much interested in having a good perspective on what the next 6 to 12 to 18 months will lead towards. Just to reiterate, the online piece where we've moved to phone, or are some of the claims or underwriting or administrative processes online. We expect those to remain in place well beyond the COVID-19 pandemic, become more of a norm, and making sure all channels are open. But at the end of the day, understanding where it's going to be, I think we're still trying to do an assessment of that and where the next 6-12 months take us. But to support Chris's comments, engagement with industry and engagement with our consumers are important to make sure that we're aware of what these impacts are, and being able to make regulatory decisions or policy and regulatory decisions that will help support the fair treatment of our consumers, as well as to basically the companies delivering insurance, so that we have a balanced environment here.
Thanks for that, Mark. And maybe I'll start with you for the next question. One thing that we often mention with our regulatory partners is the importance of industry managing the 17 regulators in the insurance sector that we deal with across the country, provincially and federally. And of course, one of the important elements to that is it means that every province and every jurisdiction could have unique responses to an issue like the pandemic. And so I'd like to ask each of you, and I'll start with you, as I mentioned, Mark, whether there have been any unique features to the pandemic in your province, any unique features of the response of industry in your province, and anything in terms of the policy response that is unique to your province. So let me start with you, Mark, and then I'll move over to Jan and Chris.
Yeah, no, I don't know that there's much unique to Alberta other than our unique climate conditions that continue to happen in summers each year. That's a big challenge in Alberta. I'm kind of hoping that we get a little bit of a break for a couple of years on that. But we believe that I think a significant shift towards digitization and online communications between insurers and insureds, so consumers, that this continues to be the norm. We will continue to meet with industry associations and stakeholders from my policy hat, but also the regulatory hat, to hear about the experience and concerns that industry associations and stakeholders have. I think that's a key responsibility within the Alberta insurance market. We want to remain responsive, basically to an evolving insurance market. And I think, forums like this, I would like to hear more regular updates from Kathy, so that we understand what your members' experience is, and if there's new trends and developments. from my perspective, I think I've covered a few of them. The balance, in these types of roles are, as we are developing new policy, how are those reflected in new regulatory changes? And I benefit from having a well-connected set of teams that are part of both the policy process and the regulatory process. And so we're able to kind of make sure that as regulatory concerns come in, and if they become existent for a long period of time, we're able to go back to policy and look at changes, and then reflect those back into regulatory oversight. So that's part of the role, and I think an effective tool in Alberta for us to remain responsive, because that's a key. I think that's a key part of this role is responsiveness, not just regulatory oversight.
Thanks very much. Jan, anything unique to Saskatchewan that you want to share?
I think like Mark, Saskatchewan and has had fairly similar experience to other regulators with regard to COVID. The one thing we are cognizant of here and try to keep an ear out for is there's a bit of a digital divide in Saskatchewan. There's great access to connectivity if you're in one of the major centers, but we still have a large rural and northern population that has very less satisfactory internet access, let's say. And that's being worked on, but it takes time. And we always want to ensure that people have alternatives to digital connection with the insurers so that they can make sure that they're receiving the same level of service as anyone else. So we do keep an eye on that as much as we can.
Excellent, thank you. And last word to you on this question, Chris.
Thanks, Keith. A little bit tangential to the current conversation, perhaps, but what I can't help but reflect on is data and evidence-based decision-making and issues evaluation. Members on this call may recall British Columbia's work on strata insurance a number of years ago, which pointed to some challenges in the commercial space vis-a-vis global risk allocation, and how essentially that was translating itself through to impact on British Columbians in terms of the premiums being paid. That in turn raised issues of fair treatment of consumers and really what's happening out there in the insurance marketplace. So, we make decisions based on data, based on evidence. We went through an elaborate process of consultation to understand what was happening. And I think that report that we released a number of years ago now, actually, I think it was last year, really was well received, and I think represented a bit of a source of truth for multiple stakeholders. So I would just maybe highlight that experience in terms of British Columbia's priorities and how we go about our business as a regulator and the issues that are important to us.
Excellent, thank you. I'm just going to quickly remind attendees in this webinar that we very much value your input and would love to hear of any questions you might want to pose to the regulatory panel. If you look at the bottom of Zoom, you'll see a set of icons, and one of them is Q&A. So if you click on that and pose a question, it will come to me, and then I will pose the question on your behalf. So please, if you do have any questions, don't hesitate to pose them using that functionality. I'd like to ask the three of you about industry now in the past 18 months, and what you think industry has done well, and also what you think it could have done better in the pandemic environment. So both on the positive and as well in terms of improvement, we would very much value your input and feedback. Let me start with you, Mark, on this one.
So I think three areas I would say industry's done well in responding. I mean, many insurers have offered premium refunds, payment deferrals, rebates to policyholders, and delayed canceling policies for non-payment. So we have observed that, and I think that has really helped within the pandemic environment. I think that's important. We've talked about technology, the wide adoption of technology. It's sustained I would say, client engagement, and has I think reduced financial burden on consumers. So that's a positive, and I know that costs money, but moving to the use of technology, online platforms, or the adoption of telematics on auto insurance is one example. I know we're talking about life today, but that's one example of where it really has kind of stepped in. And I'm aware that a lot of insurers activated your business continuity plans to ensure that insurance services are not only delivered online, but they're delivered securely. We talked about that recently. And as you move into the virtual world even more, that's going to be even more important. So cybersecurity is one we've talked about, and it's one that we hear a lot of feedback on to make sure that information is secure. But I think that premium refunds and payment deferrals in some cases have really helped out, and then rebates to policyholders. So we're still doing the number crunching on that to try and really understand the full impact to both insurers and consumers. But that's something that I think is a positive thing that we have seen well in responding to the pandemic environment by the industry. Those would be three specific ones.
Well, thank you, Mark. And Jan, any thoughts on what industry has done well and what it could do better?
I again, we probably echo Mark a lot on this. I thought, through the pandemic, I really appreciated the coordination that industry had through their associations to ensure that there was a lot of communication happening, keeping regulators up to date through CCIR, and being able to establish those forums to meet and discuss and share issues as they were emerging. So everyone was on the same page and knew what was coming up. We really appreciate the flexibility and the support that was given to consumers who are facing challenges throughout the pandemic, and we hope to see that sort of flexibility, transparency, support continue anywhere where there's a little bit of room to give some extra space for consumers to make the decisions they need to make when they're facing some challenges is appreciated. And of course, it was a really smooth work from home transition, and there was very little break in services for individuals. Some transactions had slowed down in the beginning as everyone was adjusting to the new normal, but they were quickly back up to speed, I would say, and that was really heartening. So we hope to see that kind of service and support continue into the future.
So thanks, Jan. Chris?
Yeah, thanks, Keith. Again, echoing Mark and Jan's comments and my earlier ones, my sense is that industry was extraordinarily flexible and responsive. Again, novel, unique times, and the ability to respond was commendable. Again, really appreciated the coordination, the collaboration, and the open dialogue with the CCIR, extraordinarily important. Maybe just to emphasize one of Jan's points, I think when we encounter these stress events, what it really does throw into sharp relief is, do consumers understand what they were buying in the first place? Do they understand the exclusions? Do they understand what is and isn't covered? And again, understanding, of course, the very novel scenario that we were placed in. I think for me, it really does just emphasize the fair treatment of consumers concept of ensuring that consumers do understand what they're buying, and then fulfilling on the promise of those products when consumers are most in need of that support from their insurer. So that may be my main reflections there, Keith.
Sure, thanks very much, Chris. We do have a question from the audience. reading it, I think this could be a slightly difficult question to answer. So I'm just going to open it up and ask if any of you would like to take a first crack at it, and then I'll see if any of the others would. And then following that, I have a much broader question around the fair treatment of customers that I'd like to ask each of the three of you. And starting with the audience question, let me just read it. Does the fair treatment of customers guidance remove the ability to make exceptions in the consumer's favor, especially during the claims process? Any of the three of you like to try that one out? So I think the concept here is if you make an exception to your rules, is that unfair to others because it's not part of your policy?
Reverse unfairness. You know what? And again, it's a great question. These are international standards, either international expectations. They've been adopted by regulators. There's been robust conversation with industry that's taken place over time. You know, and I don't want to over simplify it, but you know what I tend to think about is the front page of the Toronto Star type test. So you know, in terms of fair treatment of consumers, what are the optics here? How would that scenario play out in terms of perception of your average Canadian? And you know, the FTC guidelines are guidelines. They're not intended to be prescriptive. They're not intended to be compliance based. And so there is flexibility inherently built into the guidance, and you know it is an iterative process. Ultimately, what we want to be getting to is a place where FTC is front and center of all insurers, of all industry, because at the end of the day, you want to be in a position where you're doing what's right, as opposed to being required to do but what's right by the regulator. So it's a great question. There's an FTC working group that CCIR has convened, and those types of issues are precisely the types of issues that can and ought to be brought to that particular forum, so we can better understand the shared sense of what FTC means and how we all best move together to make it real for Canadian policyholders.
So that was a really great answer, Chris. Jan, Mark, would either of you like to jump in on this?
I would just, I think Chris had answered it really well. The answer to the question is no. I think there's a reasonable test here on balance of what's best for the consumer, and often individual cases are just that, individual cases, and when you're trying to review them, you look at them individually, based on policy and based on the Provincial supervision. So I'd just say no. That's kind of I don't know that's. Yeah, I would leave it there with Chris's answer. Yeah.
I'd have to agree with Chris and Mark for sure. I think where you have that sort of FTC is a principle, it's not a rule. So you've got to apply those principles. And if you're running into something that sounds like a unfairness issue, maybe it's time to review those policies and procedures to see if they really are providing fair treatment. So.
Okay, well, thank you to all three of you for those answers. As I mentioned prior to asking that question, I wanted to follow up on it with a broader question about fair treatment of customers. This is a topic that has been an increasing focus of CAFI as an association, increasing importance to our members, increasing part of the discussion of the CCIR and with regulators. And one of the areas that we've had some very helpful discussions with CCIR and with CISRO about is that, to a degree, this is about business culture. It's not about prescriptions. It's not about rules. It's about an attitude and embedding in the culture of organizations this concept of fair treatment. And that can be difficult to measure. It can be difficult to demonstrate that you're doing that. And so we've certainly had some very fruitful discussions about that. And I wanted to ask the three of you, I'll start with you, Jan, just for your comments and thoughts and maybe perspectives to industry. about how best to manage around something that is very, very important, but is also a little bit abstract or a little bit difficult to show in concrete ways at times.
It is hard to show more abstract concepts through your policies and procedures and your governance structures, but there are ways of doing that to ensure that fairness starts to be part of that culture. And if you look at the perception of what the industry wants the public to see them as, insurance is such a vital part of people's lives. They want to know that they're getting fair treatment for something that they think is an essential part of what they need to have a responsible financial plan for themselves or roadmap. So, it's a lot about figuring out how to make it transparent, make it reasonable, and make it reflect what the perception is out there that you want the public to have of the industry. So it's a struggle for sure, and we try to provide some guidance through FTC, and we'll keep working with industry on that.
Thanks, Jan. Chris?
Yeah, thanks, Keith. I just grabbed a report that CCI released in terms of consolidated observations on its review of FTC over time, and I noticed under the key observations, corporate governance and culture is one where the report identifies that can be more clearly defined, better defined. The other one that jumps out at me is number 3, which is incentive management and remuneration structure. So, in terms of incenting the right behavior, that jumped out at me from the report in terms of something tangible, something tactile, in terms of measurement, in terms of encouraging the right behaviors within entities. Is FTC being rewarded? Is it being encouraged through both the internal remuneration, also the remuneration paid to distributors? Is a very tactile and specific place of focus, I'd suggest. The other thing I would highlight is, tone from the top and policies and controls are all very well and nice, but what I tend to think is how is all of that translating into the entity's actual interface with the consumer? So if all of that's in place, but it's failing at that point of sale, that point of servicing the customer, then I'm not sure that all of those controls and governance and tone from the top is effective. So I'd say kind of a bit of a bottom-up and a top-down approach. How is all of that translating into the frontline interface of the consumer is an area where I think industry could also focus in terms of its metrics, in terms of its performance management, and in terms of its FTC targets.
Thank you, Chris. Mark?
Yeah, I don't know if I have more to add. I think I would add this, is that, forums like CAFE, forums like CCIR, where we do have engagement with some industry associations, that's where, that feedback needs to come, because as regulators, we get feedback with letters from consumers, basically identifying potential, what you would consider unfair treatment. Not all are accurate. Some are not even, some are not as accurate as they could be. But that's why engagement with regulators is very important. We all have meetings with different industry associations, different industry competitors, and having a discussion about what they're working and what they're not. And FTC is often on the table for those discussions to say how we're hearing these type of practices could be happening, and we want to make sure that they're not. So I think engagement's extremely important in this process, both, and I mean two-way engagement, so that you're aware of instances that are out there that are having potential adverse conditions on the environment of obtaining fair insurance.
So thank you, Mark. I'd like to turn now to CCIR and harmonization. Each of you sits on the CCIR, and it is a very important body in terms of many different activities, but certainly from industry's perspective, its role in promoting harmonization across all the different jurisdictions is critically important. I mentioned earlier that in insurance, our members have 17 regulatory authorities when you include licensing and regulatory and federal and provincial and territorial authorities. So, you know, the ability to try to get as much clarity and consistency across those authorities is so important to efficiency. And in that regard, the fact that so many jurisdictions adopted the CCIR guidance as opposed to producing their own is something I know that industry was very supportive and appreciative of. I'd just like to ask you, in terms of your work on CCIR, if the three of you could comment on where you see harmonization going, whether you think industry can be hopeful that there will continue to be a push towards increased harmonization, especially in terms of different but similar regulations across the various jurisdictions. So maybe Mark, I'll start with you.
So I guess the positive for me, and I, you know, to be honest, I'm new in the role, and I've been to a couple of CCIR meetings. They're like any other federally sponsored meeting. You know, there's many different perspectives at the table, and harmonizing them. In some cases where there's low-lying fruit, it's fairly easy to say, yeah, that makes sense. And I think in, you know, some insurance lines of business are pretty consistent across the jurisdictions, and CCIR, I think, helps with that. So those are easy ones. Then there's the harder ones where we think we have unique circumstances in each of the jurisdictions. But I think we all, at least from the CCR table, helps us think in the same direction, but maybe we're applying things just slightly different from our regulatory oversight. So I agree with you, the importance of harmonizing as much as we can. Many of the working groups allow us to do that. When I look at some of the working groups around best terms pricing and that in some of the insurance lines, that's one where trying to come to, you know, a good, reasonable outcome where it is probably not a practice that is helping consumers obtain insurance. So that, I believe, has been a long process to get to some direction, but though, and trying to close that off. And I don't know if we'll get a final direction, but I think you've had some engagement with industry, and that's been very helpful. Another working group, like I talked about on climate change, is an area that I'm hopeful that starts to provide more help and fruit, because we're all impacted differently by it. So if we'll have harmonization across all the jurisdictions, or just those that are adversely impacted, I do find that an area that I'd like to approach that I think CCIR wants to look at is, you know, insurance rates keep going up across all of our jurisdictions for various reasons, some more in other lines of business than others. But, you know, just returning back to our those that are sending in letters saying, well, you got to shop around. I don't know if that really demonstrates us providing good regulatory oversight, having a bit better understanding. So once again, engagement needs to be part of that process at the same time. So the harmonization is important, but I've worked at the Fed Prov level for many years, and it's a longer drawn out process. But the intent of each of the jurisdictions still remains to have those discussions and see what we can do.
Thanks very much, Mark. Chris, any thoughts on this?
Yeah, from my perspective, the fact of the matter is this is an integrated national regulatory framework that we administer and are a part of. And I kind of hesitate at the use of the word harmonization, because it implies, I think, different things to different people. But it is an integrated national regulatory framework. And the fact of the matter is, given the specifics of the jurisdictional accountabilities, the constitutional accountabilities of provinces and the federal government, the IMF through its reports have essentially encouraged us all to work more closely together to ensure that the system is efficient and effective and appropriately tailored to the risks. And so there is no shortage of goodwill, appetite, effort to get to the right place. Sure, from time to time we will encounter our jurisdictional barriers. We try to overcome them. We try to get to a common place where we can, and I suggest most of the time we can, some of the time we can't. But there's no shortage of goodwill around that table in terms of getting to where we need to get to. And I would hope that industry has seen that commitment in terms of the progress over the last number of years, and also in the form of the dialogue that CCIR and its members are committed to having with industry through the working groups, through these types of fora, as we work through some tough and complex issues, both as regulators and collectively as the marketplace.
Thanks very much, Chris. And Jan, last word to you on this question.
I think Chris and Mark covered a lot of this. Harmonization is a really tough topic, and there's definitely a range of views on everything from strict legislative harmonization to harmonization of interpretation. And I think that end of the spectrum where we can come together and find ways to interpret our legislation in a common way so everyone knows the expectations that we all have is a really valuable service that CCIR can offer. I think one place where we've been really successful is through the co-op supervision. The annual market conduct survey is a great way where we've all come together and shared resources and collected some really valuable information that we're now in a period of time where we've got historical data that can start to demonstrate to us trends and issues that might emerge. So I think if we keep working in that direction, it'll serve everyone well.
Excellent. Well, you certainly have been a wonderful panel, great insights, and the time has passed very quickly. We only have a few minutes left. I just have a couple of additional questions before we close this out. And the first is about RIA regimes. So as we know, Alberta and Saskatchewan have long-standing restricted insurance agent or RIA licensing regimes. And Chris, BC is about to develop and launch an RIA regime in the not too distant future, as called for in the BC Financial Institutions Amendment Act that was passed in November 2019. So for Mark in Alberta and Jan in Saskatchewan, the question is, do you have any review, change, or overhaul plans on the horizon for your respective provincial RIA regimes, or any tweaks being contemplated in terms of how your authorities monitor and regulate them? And then for Chris in BC, can you share any news with our audience about your province's plans for developing and launching its own RIA regime? And perhaps you could also share any insights about the role that BC FSA will play in that work. So let me start with you, Mark.
So we don't have any, I would say, large changes on the plan horizon right now. We are looking at amending some regulation just to ensure that that insurance agents and the companies that are delivering those services are able to deliver services at different levels rather than just at one and then having to replace them. So we're looking at some regulatory changes that are trying to come through, but those are in the policy development process and they aren't done yet. But large impact changes are not on the horizon right now.
Okay, thank you, Mark. Jan, what about Saskatchewan?
Same for Saskatchewan, not a lot of regulatory changes directly on the horizon. Of course, our insurance councils are the boots on the ground when it comes to RIA licensing. So, we always try to find out from them what's going on that end, if anything needs to change. We also find that every time another jurisdiction introduces RA or makes some changes, they build on the work that was done before, and there's often some innovative things there. So we'll be looking forward to seeing what BC implements in the future on this, because it might be some good ideas for us too.
Perfect segue to Chris.
Yeah, I'm going to be a little bit coy here, Keith. So the restricted license piece is absolutely something that's in play as a part of the new FIA, and we continue to support the ministry as it works through policy development, as does the Insurance Council. The bigger piece that I'd like to highlight is oversight. So when it comes to any distribution channel, including restricted licenses, we are focused on the insurer's accountability for its product and ensuring fair treatment of consumers through all stages of the product life cycle, in turn, including the sales piece. And I would just highlight our experiences with Creditors Group Insurance, which some on the call may be familiar with, where a number of years ago, we encountered some aggressive sales practices, training and development that wasn't taking place within that particular distribution model. So, I think introducing a new option that's consistent with what's available in other jurisdictions is, I guess, generally something that the ministry is proceeding with, and we're informing that. But I think at the end of the day, the more important thing is insurer ownership of its product and ensuring that fair treatment of consumers is happening at all stages of the product life cycle, including through distribution, irrespective of the distribution channel.
All right, thank you. And one last question from me, and it's about insurance policymaker and policy influencing on the one hand, and insurance regulation on the other hand, which are both part of the mandates of your authorities in your three provinces. And so the question is how those two different elements intersect and interact at your provincial authority, and which, as I mentioned, has a role in both of these key areas. So Chris, I'll start with you and then go to Mark and Jan.
And Keith, sorry, in terms of the question, it's to what extent does the regulator influence Big P policy at the government level?
Yes, I'm referencing the fact that you have roles and responsibilities for insurance policy making and policy influencing, but also for insurance regulation, and how those two interact and intersect.
Yeah, it's a great question. I mean, we don't set the legislative policy, of course, government does, but we have very robust exchanges and sharing of perspectives with government as it develops policy. And I mean that to me is part of a healthy partnership. At the end of the day, we're a creature of government, we're a creature of policy. Government provides us with a mandate as the regulator, and then we independently execute on that. But of course, that's not in a vacuum. So we value our partnership with government. We value the dialogue. One example that I could potentially point to is, again, those familiar with the Strata Insurance report that we did a number of years ago. We want to be a source of truth. We want to be identifying where the issues are. We want to be a part of the solution. We want to be involved in the conversation about where we can, again, in totality, make provide consumers with a better experience when they're engaged with their insurer and purchasing insurance. So it's a great question. I would regard it as a partnership, and I'd regard it as something that's critically important to ensure we get to the right marketplace outcomes.
Thank you, Mark.
Yeah, I would concur. I mean, yes, the Big P policy is set out by the political leaders, and then it's over to us in my role to look at how that's turned into active policy that can be implemented. And as I have both regulatory oversight and the policy development piece, we're able to connect those two often. One being the policy, as it's being developed, the regulatory body that we have here is able to provide input into it as to what's the reality of that actually being delivered, and us to be able to provide oversight in my role as superintendent. And I think it goes back the other way sometimes too, as we continue in our regulatory oversight roles, start to see market conduct in a certain direction. We will then go back to policy and see how we need to change that and amend it, be it legislative, regulatory, or maybe just a bulletin policy that, you know, changes that approach and allows for more effective regulatory oversight. So they're well connected. It's part of an existing policy development process that turns into the implementation of regulatory oversight. So those two need to be connected. If they're not connected, you know, you're going to have some adverse conditions in any marketplace.
Thank you. And last word on this to you, Jen.
Our shop is a little smaller than the other shops, I suppose, in that way, where we wear both hats. We're policy advisors, we're a regulatory body. So we're right in the thick of both of those activities most of the time. Of course, we've got the securities division within our organization who are old hat at integrating policy and regulation. And we have noted that there's a number of other jurisdictions that have rulemaking authority now in the insurance realm. And I think we'll be seeing a tighter relationship between policy and regulation because of that rulemaking authority. So I think interesting times ahead for sure in that area.
Excellent. Well, you have been a terrific panel. Before I close it off formally, Jan, Mark, and Chris, I'm going to ask you if you have any final comments, messages for industry, any last words to the wise that you'd like to share. Jan?
Oh, I don't know if I have too many words for the wise. Just keep being fair, treat consumers well, and we'll all be happy.
Thank you, Jan. Mark?
No, I would just, you know, I support, you know, having regular updates from CAFE so that we understand your members' experience. And so if there are new trends and new developments, we want to know what's transpiring so that we're able to understand them as we both engage consumers so that we in our responses have a better understanding. So, and thank you for the opportunity today. I really enjoy this type of engaging approach.
Thank you, Mark. And I'll just mention that these webinars are an effort to continue to have the open dialogue with regulators when we can't visit them in person. But when events permit, we'll go back to something we've always done in the past, which is we try to go with our members once a year to the West and visit our regulators in the Western provinces in person, and you know, have interactions and discussions. And we very much miss that. We've not done this now for over a year and a half, and as soon as we can, we'll be back in your provinces, and look forward to meeting with you in person. And Chris, I'm going to turn it over to you now to close out our webinar.
So just thank you very much on behalf of all of us for the opportunity to participate. For me, it's about the dialogue, it's about the conversation. These four are extraordinarily important. You know, you operate in a complex space, we operate in a complex space. The dialogue and the conversation is critical. So let's keep the communication channels open, and thank you very much for having us participate in today's webinar. It's greatly appreciated.
Well, we equally appreciate the opportunity, and I just want to reiterate how insightful and interesting the three of you were, and so transparent. So thank you on behalf of our members. I want to thank our attendees as well for taking time out of your day to participate. And on behalf of the board of directors, I just want to thank the three of you personally, Jan, Mark, and Chris, and we very much look forward to continuing to keep the lines of communication open. I declare this webinar closed, and I wish all of you a great rest of your day. Thank you.